For the first time since the economic bubble burst in 1990, Japan is on the verge of escaping its lost decades. That's causing a tremendous amount of interest in Japan's markets this year.
Indeed, investors have been getting excited about foreign investment in Japanese stocks recently.
We think Japan's outlook has turned favourable for several reasons. Firstly, economic growth is picking up this year as Japan reopens. Second, the shocks of the pandemic and the war in Ukraine to energy prices have resulted in core inflation hitting 4-decade highs above 4%, helping Japan escape from its deflationary past. Third, the Bank of Japan remains dovish, keeping interest rates very low to entrench inflation around its 2% target. Fourth, the authorities are keen to improve corporate governance and lift the performance of Japanese shares. And fifth, the yen is weak, helping exporters. All these conditions turned us overweight on Japan's equities. But recent currency weakness has fueled speculation over government intervention. What's your outlook here, Monsieur?
In the near term, the Bank of Japan's dovishness is keeping the yen weak against the US dollar. As a result, this currency pair remains closely tied to US rates, with a renewed rise in US yields nudging the dollar-yen higher. But currency isn't a one-way bet. It is hard to escape the conclusion that the broadening in price pressures will be sustained, warranting the Bank of Japan to play catch-up with policy normalization. The medium-term drivers for a stronger yen remain intact.
Thanks, Monsieur. So what's your forecast for the yen over the next 12 months?
The yen could strengthen past 130 against the US dollar again in 6 to 12 months' time. Japanese investors may bring money back home to the benefit of the yen if Japanese bond yields rise with changes to the Bank of Japan's yield cap. We also like the yen as a US recession hedge. Foreign investors could consider unhedged Japanese equity exposures, which would benefit from any yen strength.
That's very interesting. A rebounding yen would benefit foreign investors who hold Japanese assets. But the currency won't reach levels that would threaten Japan's economic recovery.
Yes, so Japan's outlook is likely to remain favourable in the long term for investors. My name is Mo Xiong.
And I'm Mansur, and this is Bank of Singapore Research.